Well, Amazon is also expected to face an antitrust crackdown, this one coming from the FTC. The tech giant will reportedly get hit with a lawsuit from the regulator later this month, according to several reports, after failing to reach a settlement. But what does this mean for Amazon investors? Well, Yahoo Finance anchor Josh Lipton joins us now with the details. Hey, Josh.
That's right. So the FTC does reportedly have Amazon in the crosshairs. And according to the Wall Street Journal, the FTC's lawsuit could suggest measures leading to a breakup of the company. So if you're an investor in Amazon, how concerned are you about that prospect? I checked in with D.A. Davidson's Tom Forte. Bottom line, he isn't too concerned. In fact, by his math, if Amazon were to be split up, it could actually be worth between $148 and $193 a share. Now, he's making that estimate based on a scenario where the company is broken into three parts, he tells me. Its own retail operation, a third-party retail or marketplace platform, and its cloud computing business. Forte argues that might even be better than if Amazon stays as is, as one big company. It could have a hard time achieving the kind of growth rate necessary, he thinks, to maintain a premium valuation. That's because the law of large numbers is kicking in, and because, he argues, e-commerce and cloud computing are maturing markets. Forte says a breakup wouldn't be simple, of course. It would mean a period of distraction for the company that could go on for years. But bottom line, he thinks Amazon could escape this risk, like he says, Luke Skywalker escaping the trash compactor in the original Star Wars. I'll be honest, not a Star Wars guy. I had to look up that I had to look up that reference, but now that I did, phenomenal by Tom Forte.
I have so many things to say to that, but I won't. So what's is Amazon going to get broken up? What's the consensus here when you talk to folks about what the likelihood of that
I think that's, at least on the street, that's a hard read to get because, frankly, I checked in with a couple other well-known financial analysts that have been covering Amazon a long time. They haven't written on this yet, which, in fact, of course, they're waiting to see what the FTC's move is here. They want to read the filing. That's pretty fair. I think one issue, though, with Forte's analysis, and I talked to Tom about this, is it possible, the risk in his analysis, that there's interdependence between these three units, right, is just greater than maybe he's assuming. They leverage each other in ways that that more than he thinks. Now, Tom says he did the math, he did the analysis. He doesn't think, though, but that's the risk if you're going to go with his call.
The risk is that you come on here again without having watched Star Wars.
I haven't seen Star Wars.
I'm on it tonight.
What's wrong with you people? All right, that was our new anchor, Josh Lipton, who has some homework to do.